Good morning, everybody, and welcome to this latest session as part of the ACT's Middle East Treasury Conference. My name is Steve Barnett. I'm Executive Director for Business Development within Abu Dhabi Global Market and a Fellow of the Association of Corporate Treasurers. So this is something that I've been doing for a very long time, and delighted to share our thoughts with you this morning on the establishing treasury centres in this region. For us, this is a really interesting time. It's been a fascinating time globally, I think, with the way in which the crisis that we're all living through has led to some fundamental challenges and really helped us to think through the way in which we become more resilient to those challenges that are around us. As part of this, we're seeing a lot of organizations that are fundamentally changing some of the business models and making those more resilient. It's not just the business models that are directly impacted by COVID that are being challenged and revised. It's actually many things across the board. And one of those things is the way in which Treasury is structured within organizations to best meet the needs of the business. That obviously reflects the fact that trade patterns are changing. We have to be more cognizant of various different time zones and locations. We want to make sure that our financial functions are co-located close to our operational units. And of course, we need to take into account all of those wonderful things like the availability of finance, the availability of credit, the tax situation that we face, as well as the way in which trade patterns are going to change, and therefore the needs of the business are going to change. And if I can move on to my first slide, please, then I'll take it from there. Thank you. So if we look at some of the things that we've seen in terms of the role of corporate treasury, in many ways there's nothing new about what we're seeing now. We've been through this cycle many times before. We've looked at models that include decentralized treasury structures and putting our financial operations as close as we can to the business. Clearly, there are some merits in doing that in terms of responsiveness, in terms of understanding the underlying needs, in terms of even simple things like cash flow forecasting. We've seen partially centralized treasuries through regions, and that's what I'm going to focus on today. But we've also seen fully centralized models with a global treasury center that sits in an international location with all business units reporting into a single unit. For us, it's however you choose to structure it, the important thing is that the treasury function has to be a value-adding strategic partner to the business, not just to the finance function, but to the rest of the organization as well. And what we're seeing in terms of digital developments is really facilitating that, and I'll talk about that a little bit more as we go on through the session. Liquidity and risk management have been even more in focus, I think, as part of the crisis than we've seen before. And we've had a number of sessions, we've run some webinars looking particularly at liquidity management, how you manage through liquidity through crisis, and similar things. And so we're seeing the treasury functions really putting a lot of effort and focus into this. We've also seen moves towards enhancement of governance and control. Again, I'll talk a little bit more about this as I go through my session this morning. But one of the things that the international financial crises that we've faced, and I think we could realistically call what we're in now something of an international financial crisis, has really brought into focus the importance of good governance, good forecasting, good management, and good controls. Cost and efficiency have always been key drivers for what we do as treasurers, and will continue to be so. And what we're seeing in many ways now is a reversion to good working capital management and good working capital improvement practices. Some of those are complex and some of them rather less so, more fundamental. And typically we see that corporate treasuries are not regulated businesses directly in the same way that financial institutions are. Nonetheless, the regulatory burden that is faced across the industry is growing and is still really important to us. as I say, what we're seeing is really in response to all of these things, a growing trend towards regionalization of Treasury activities. And that is going to be what I focus on right now. So moving on to my next slide. I think it's probably reasonably intuitive what many of the benefits of a more centralized Treasury Centre are. And by more centralized, I mean whether an organization chooses to be fully centralized or whether it chooses a more regional model, some of the benefits will be in common. And let me just talk you through some of what we see as the key benefits that people are looking to realize when they establish these structures, and then I'll drill down into a couple of them in a little more detail as I go. So transparency and control. Transparency and control, particularly over liquidity, when liquidity can be squeezed and more difficult to come by, have been very important in terms of the roles of a Treasury Centre or a Treasury function. And getting a better understanding over global liquidity positions or regional liquidity positions and managing a holistic review of those, being able to use internal liquidity more effectively and to manage internal risks more effectively has certainly been one of the key drivers that we've seen. And I think that's changed now. It's changed from really cost-led drivers that we would have seen a few years ago, purely cost-led drivers, to drivers which are much more around, driven by the availability of data and good quality data and good timely data. Full audit control clearly is very important through these things as well. And most organizations now are moving to a much more controlled structure with application of common standards right the way across the business. And so being able to centralize or regionalize some of these functions really is a contributor to that. Clearly, reduction of transactions, costs and time are still the primary driver for most organizations that are looking at how they transform the way that they do treasury activities across their group. And reduction comes both in terms of the manpower time, but also the transaction costs and rationalization of some of those high cost, high professional functions that we see around the place, particularly trading functions. And while trading per se is not necessarily a role of all of the treasury functions, treasury dealing is still a core part of it. And if we want professional dealing functions, professional trading functions, then most organizations will not wear the cost of that being decentralized across all of the operating businesses. And so some form of consolidation is extremely beneficial. Reduced risk of mismanagement and fraud is still very high on the agenda as well. And if I look back across my career, I've had some very interesting engagements where I've been asked to go in and look at cleaning up some of the mismanagement that we've seen across different businesses. And the mismanagement isn't always fraud. Mismanagement can be inappropriate setting or communication of risk appetite. It can be inappropriate trading controls. It can be the opportunity for leakage within the system. So it can come in many different ways. And just going back to that first one I mentioned there, in terms of inappropriate setting of risk appetite, one of the ones that always sticks in my mind was a situation with a very significant corporation that was looking at the investment of its surplus liquidity and had concerns over the way in which investment returns declined. The governance structures that were put in place were used to encourage the treasurer to take on additional risk in order to bring the returns back up to the levels that they'd seen previously, without really an understanding of the two sides of the distribution. Unfortunately, a significant loss was incurred, which was initially focused on inappropriate activity of the treasurer. When you look back at that and do the investigation into it, which I was doing, you realize that actually it's not around the controls at the micro level that have been put on the treasurer. It's about the controls over the risk setting process and the risk appetite establishment. Prevention of duplicate processes, I think, is a corollary of some of the things I've talked about before, and the optimization of investment returns is very much around elimination of unnecessary spread costs and better management of the portfolio. What we are seeing in addition to this is the move towards fewer but deeper banking relationships in many cases. The plethora of banking relationships that were managed across complex groups has changed over time. And what we're seeing now is, and I think the crisis brings this into sharp focus, is that those banking relationships that have been well established based on trust, good, transparent flow of information, can be more enduring through these difficult times. And access to liquidity can be enhanced as a result of better management of those relationships. And so consolidation, rationalization, and improvements of banking relationships is also one of those key drivers that we see here. So if I move on to my next slide and drill down into some of these areas a little more. So globalization or internationalization for me is very much part of that regional versus global debate, and often follows trade patterns. Now, one of the interesting things is that we are seeing probably more a move towards localization of trade than we've seen in the past. And many people would see that as a reason for localization of treasury functions as well. I see it slightly differently. I see some of the developments, particularly that we observe from this region, where the strong South-South trade, the trade along the Belt and Road, the trade that is traveling through this part of the world into the continent of Africa, some of these real growth areas is still showing a strong degree of cross-border trade flows, which require a complexity of treasury management that is difficult to achieve in local businesses and local activities. And so while we may have some of our stakeholders looking at the perhaps more restricted international trade flows, I think for this part of the world, for emerging markets and for that South-South trade, the cross-border flows are real and are leading to needs for regional management of treasury. Probably the biggest thing that we've seen as a catalyst for the change in the way that people are structuring their treasury is not necessarily the driver for establishing them, but the way that they're changing their treasuries has been the advancements that we've seen in technology. And it isn't just about availability of data, it is also about some of the innovative fintech type solutions which are being deployed to support organizations to manage their treasury functions more effectively. I've seen some really interesting things in terms of the way that we've had to shape the establishment of treasuries over time. When I first started looking at cross-border cash management, cross-border liquidity management, and centralized treasury functions, we had tremendous challenges to achieve what we wanted to achieve. Cut-offs were a major challenge for us. Time zones were a major challenge for us. Value dating practices were a major challenge. The availability of information in a timely way to be able to manage intraday or end-of-day positions was a huge challenge. And now that there is far less reason why these have to be constraints in terms of the way that we choose to go forward and the way that we set up our treasury capabilities. So to a much larger extent now, we have real-time data around the things that we do. We've seen some really interesting developments in terms of the way that banks operating in this region, and that is not just local banks, that's some of the biggest international banks playing in this space, have brought innovative solutions to the market. I talked about banking relationships before, and the way in which we used to see banking relationships being developed in order to support regionalization of treasury often involved a local provider that was managing local cash flows, liquidity, payroll, supplier payments, and things like this with an international bank, an international banking partner, providing an overlay. And that worked to an extent. That had some limited benefit, but was constrained by some of those things that I was talking about before. Often you didn't have an end-of-day position until it was too late to concentrate cash out of a local bank. Often you didn't have clarity on the position as a result of multi-currencies and different validating practices. Often you had constraints around forecasting the flows that were coming through either during the day or over multiple days. And so all of this was a huge constraint. What we're seeing now is some really interesting technology being deployed where you can have an overlay bank, which effectively never holds an end-of-day position for the organization. It's merely doing the concentration of positions, the offset of the exposures, the offset of balances, and the return of a net balance back into a local bank for deployment on all of those local requirements that I was talking about before. And this, for me, is a huge advance. It's a huge step forward for us as treasurers in terms of being able to manage some of those real complexities, not just in a country, but across multiple countries. The regulation that we're operating under certainly continues to evolve. We see a real importance around the way in which regulation affects things like netting particularly, and the challenges over netting exposures that we see in various different places. And for us, that's a problem. For the banks that are supporting us, it's an even bigger problem when it comes to looking at capital costs associated with that. So netting, and I'll talk about this a little later again, is one of those key components of regulation which we always like to think about. Frankly, when we see people setting up in this part of the world, particularly in ADGM, one of the first things that we talk about is basis of law, the quality of regulation, the accessibility of regulation. And by that I mean, do we understand what it's telling us? Do we understand how it operates? Do we understand how it affects us as treasurers? Is it clear? Is it concise? Is it predictable? And so all of those things are things which we see organizations really wanting to be sure of before they enter into the establishment of a new Treasury Centre. And if I move on to my next slide, please. So we talked about many of these things already, but I just want to set them in the context of Treasury regionalisation. If organisations choose to move to a more regionalised structure, they have a range of benefits. For me, such things as operating in a particular time zone with different working patterns. I mean, here we have a different working day clearly than those that we would see in many other parts of the world. We have different holiday structures. We have different cutoffs. We have different time zones. And being able to manage something which takes into account all of those things has been a big factor in people setting up treasury operations in this region and not trying to manage it from a London, New York, Amsterdam, wherever that might be, Singapore. Netting of cash exposures is certainly still one of the core functions that we see being put into a regionalised treasury. And we're seeing some interesting structures. I always encourage people to not be led by tax, but be completely aware of the tax environment in which they're operating. And we see a fairly consistent tax treatment across this region, so we're quite lucky. We're fortunate that we operate in an environment of 0% direct tax, no withholding taxes. But often you're managing situations which don't have those luxuries and benefits. And the way in which you do cash management needs to reflect that. So please don't forget that some structures are better used as notional pooling structures. Some are better with physical transfers and zero balancing. And that may be driven purely by the way in which the interest, either directly or on withholding tax, how the interest is treated from a tax perspective, either directly or from a withholding tax point of view. And so having the ability to have a range of flexible structures which can be consolidated through a regional centre is important. Liquidity has become the buzzword for us all through every financial crisis that we face, and it's really quite important now. In some ways, again, I see a back to the future type situation happening across the marketplace. We're particularly seeing the revision of things like supply chain financing and old-fashioned invoice factoring and supply chain management structures, which, of course, I say old-fashioned, but really old-fashioned enabled by new technologies and the ability to really use technology to advance those structures in a much better way. It isn't just about bank lending. It isn't just about capital markets issuance. The liquidity management we can see coming through those invoice financing structures. And actually what we're seeing is some of the more liquid organizations providing financing throughout their supply chain as well. So for me, when you're looking at the benefits of regionalization within a treasury structure, it is important to know what the local opportunities and local cultures are in each of the countries for which you're responsible, because there may be some things that you can really take advantage of which wouldn't be intuitive if you were sitting, again, in a remote global center. We're seeing here some of our big organizations that really see the value and importance of their supply chain to the extent where they not only will, in some cases, pay early, in some cases they will provide direct lending and facilities to support the trade that is being done. Data analytics, clearly big data is the way forward, and we're seeing, again, really smart fintech type solutions which enable us to gather the data that we need to make good risk management, good liquidity, good cash decisions in a far better way than we've ever been able to before. And it may be that we're able to move to more centralized structures than I think are really efficient today. Today, going beyond regional for me starts to break down some of those efficiencies that we like to see. In terms of credit and funding, then yeah, as I say, I think that we really need to look a little bit beyond the traditional banking solutions that are out there and be a little innovative around some of these things. I encourage people to think about ways in which they may also be able to work with or integrate some of the really interesting fintechs that are coming to market into their treasury solution, into their treasury systems. And it may be that you can use an API to get in a new type of payment solution, for example, which will allow you to do either your domestic or cross-border payments in a far more efficient and far more effective way than we've ever been able to do before. And of course, if you're using some of those new solutions, some of those fintech solutions, the control that you have as a result of, for example, the use of distributed ledger technology really can move things forward in a far better way. Gone are the need to do some of those horrendous reconciliations that we've all had to do in the past, or they can be gone if we integrate the solutions effectively. Moving on to the next slide, please. So I've made a bit of a pitch for the fact that I think that we, as treasurers, we should be looking at the way in which we structure our treasury solutions and reevaluating that as a result of the crisis that we've been going through. I think that that the business models, as I said at the start, are changing. The way in which trade flows are changing, the way in which our organizations are changing, and even such fundamental things as travel structures are changing. Over the last 30 years or so of my career, I've spent probably half a year every year sitting on an aeroplane going to the places for which I'm responsible. Since February this year, I have been nowhere, and we've done everything through technology. I really think that this is going to be something different, and it is going to be the way that we operate even when we come out of the COVID crisis. We'll do more, but not as much as we did previously. And what I think that leads to is more of a regional focus. So we'll do more traveling than we're doing today, but in a far more limited scope. I see fewer people that really want to do the transatlantic flights on a regular basis in the way that we might have done historically. And Abu Dhabi is therefore a perfect place to locate a treasury centre. Why? Well, some purely geographic reasons. We're in a great position from a time zone point of view between East and West, bridging that gap and bridging cut-off positions for those that want to still work a reasonable day length, but be able to manage across the different time zones. Those things are very feasible from Abu Dhabi. We're sitting at the heart of one of the biggest regions of global growth. 60% of global GDP is within a 7-hour flight. We're surrounded by 50% of the world's hydrocarbons. We've got some of the things that I mentioned before in terms of different working calendars and holidays, some cultural sensitivities which need to be managed that are facilitated by operating out of this part of the world. We have progressive and evolving working environments. One of the things that I've seen is that I've been in Abu Dhabi now for 7 years, and the pace of change is amazing. The embracement of technological advancements is high. The government has invested strongly in tech development, which is driving some of the ways in which the industry evolves. So that includes health tech, education technology, fintech, of course, and even supply chain technology, food tech and agricultural technology. But the way in which this technological change is evolving also is leading to regulatory and business practice evolution as well, and making this an even better place from which to do business. We have the dollar currency peg, of course, which is common across this region, which I think really supports some of that cross-border trade which is being done. And I would say this as a native English speaker, wouldn't I? But for international activity, English is still a very important component of cross-border business and widely and well spoken in Abu Dhabi and across the region. One of the things which I talked about is the importance of access to emerging markets, and we see that particularly here with the Abu Dhabi investment into Africa being a great catalyst for both trade flows and financial flows going into the continent of Africa as well. Only China has stronger FDI investment into the continent of Africa. And those strong relationships into South Asia as well. Been working very closely with our counterparts in India in recent times, seeing far more trade coming out of places like Pakistan as well. So being located so close to those places is important. Let me take my next slide, if I may, please. Can I take my next slide, please? Thank you. Sort of drilling down beyond Abu Dhabi, let me just say a few words about ADGM, and I'll be relatively brief about this. But in ADGM, we have been very successful in bringing in regional treasury centres as part of this. And you'll have seen perhaps the session that we did in conjunction with Citibank and with Siemens at last year's session. And hopefully the Siemens guys were able to share some of their good experiences of doing this. But the reason that we've been able to support the development of international treasury centres, regional treasury centres in ADGM is, yes, we have the tax attractiveness. And yeah, I always think back to when I first started designing and developing international treasury centres. We always went to places like the Netherlands, like Belgium, because of the tax treaty network and because of the tax effectiveness of it. As I said before, I don't think that the structures should be driven by tax, but tax remains an important feature of this. UAE has, ADGM has 0% direct corporate tax with no withholding tax, as I said before, but it has one of the widest double tax treaty networks in the world, more than 100 double tax treaties. And when you do the benchmark against other places that have been used as international treasury centres in the past, it really stands out as being a core strength in terms of locating that treasury centre here, excuse me, in Abu Dhabi and within that in ADGM. We've been delighted about the rapid growth of ADGM. We are an international financial centre and have been established now for a little over 5 years. We're fully launched. In that time, we've been able to attract some of the world's most effective international banks, and particularly some of those that are strong players in cash management and liquidity management. Not only that, though, but also big international players that can provide access to international capital markets for those people that are doing business here, supported by an amazing cadre of lawyers, advisors, and consulting firms that can help people on that journey as well. The currency environment that I mentioned before with the US dollar peg is clearly a factor which supports doing business here as well. The infrastructure is important. It never ceases to amaze me how much easier it is to encourage people to come and establish here in ADGM once they've visited. And the working environment is fantastic, and one that I'd encourage those that haven't been to come and experience for themselves. Clearly, credit rating and stability are important as well. Abu Dhabi has been recognised as the safest city in the world by a number of commentators over several years now, and that is important, and it reflects into the strong country credit rating, which gives people that confidence of both a physically, economically, and politically stable environment from which to operate. The business environment is something that we in ADGM focused very heavily on, making it a simple, straightforward, and to a large extent digital environment in which to work. And that isn't just the registration of entities, it isn't just the submission of ongoing reporting, it is also the dispute resolution structures. And while we'd all love to convince ourselves that we're going to be able to focus all our time on development and new business, the reality is that whenever you're putting a structure together, you always have to have in mind what happens when it goes wrong. And for me, the way in which at ADGM we've put in place the first fully digital court structure anywhere in the world, concept of paper case files no longer existing, cases being heard as a matter of course by video conference, strong enforceability across the UAE and across the common law world, and that direct application of English common law that gives you the certainty of outcomes, or the predictability, perhaps I should say, of outcomes that are sometimes difficult to achieve in other environments. One of the things that I think we've brought to Abu Dhabi is the ability to operate as one emirate with two systems and enable people to do the things which are best suited to their activities in the environment which is best suited to that as well. So what that means is that we see firms, I mentioned Siemens before because they've been on this platform, but others as well, who have operating businesses in Abu Dhabi or in the region, and their financial activities, their treasury activities in the common law jurisdiction, in the financial centre where they're best suited. Skills and talent is something that's been extremely important both across Abu Dhabi and within ADGM. The development of the ADGM Academy is something that has been something that's given great opportunity for the development of new skills, both amongst the local workforce and for international participants as well. So working closely with the ICAEW, with the London Institute of Banking and Finance, with the CFA Institute, and hopefully much more closely in the future with the ACT, is something about which we're very passionate. For those for whom this is important, and it's certainly important for me, we've also been very innovative around the push towards sustainable finance. And sustainable finance is something that we see really taking hold right the way across the marketplace. I was recently on a webinar with our friends from Etihad, who I know have been presenting or are presenting here at this session as well, And when you've got an organisation which is in an industry which would typically be considered carbon intensive, to see the amount of focus that they're putting onto sustainability, sustainable finance, the first green financing transactions in that industry, is really quite reassuring. And ADGM has driven the development of the Abu Dhabi Declaration around sustainable finance, the sustainable finance principles that have been subscribed to across this part of the world, and are really supporting the development and push towards more green and sustainable types of transactions. Again, thinking about some of the things that we've put forward in recent times. If you're interested, please have a look on our website and see the recent webinar that was done on sustainable transaction banking, which I think is a really interesting step forward. We've all thought and heard about green bonds before, but some of the things that we're seeing around green trade finance and even green current accounts is really quite reassuring.